Good morning and welcome to my office. Let's get started.
The global gold market just fractured into two completely different realities. If you're watching the spot price on your television screen, you're looking at a fictional number. China just established a $282 premium on physical gold, and it broke the West. While Western investors are being told that gold is trading at its normal paper value, the actual physical reality in Shanghai is telling a completely different story. Buyers in the East are aggressively paying a massive premium to secure the actual physical metal right now today. This is not a temporary glitch in the pricing matrix. This is the deliberate destruction of the paper pricing mechanism that has allowed Wall Street to control precious metals for decades. The gold split is here. The sovereign whales are draining the vaults and time is running out. You have to understand how the global pricing system was designed to work. For half a century, the COMEX in New York and the London Bullion Market Association have dictated the price of gold and silver using unbacked paper derivative contracts. They trade promises, not actual metal. This fractional reserve system functions perfectly as long as everyone agrees to settle their trades in depreciating fiat currency. But the East has stopped playing the paper game. The Shanghai Gold Exchange requires absolute physical delivery. You cannot settle with a paper promise. When a sovereign superpower demands physical settlement, it exposes the vulnerability of the Western exchanges. The $282 premium is the exact mathematical cost of extracting real physical gold from a system built entirely on unsustainable financial leverage. This massive divergence between East and West creates what financial insiders call an arbitrage opportunity. In a normal functioning market, traders would simply buy the cheap paper gold in New York, take physical delivery, ship it to Shanghai, and sell it for a massive risk-free profit. But that is exactly why the Western system is terrified right now. The arbitrage is not closing the gap because the West does not have enough physical gold to satisfy the relentless Chinese demand. The vaults in London and New York are being systematically bled dry by Eastern buyers. We are witnessing the greatest physical wealth transfer in the history of the modern financial system. Over the past several months, thousands of tons of gold have quietly migrated from Western depositories into Asian vaults. Once that metal leaves, it never returns to the paper system. To truly grasp the magnitude of this event, you have to look back at the collapse of the London gold pool in the late 1960s. At that time, 8 major Western central banks colluded to suppress the price of gold at $35 an ounce to protect the fiat dollar. But foreign nations realized the United States was printing too many dollars and began demanding physical gold instead of paper. France led the charge by sending battleships to New York to repatriate their physical bullion. The drain on the Western vaults became entirely unsustainable. When the London gold pool finally collapsed under the weight of physical demand, the price of gold skyrocketed. The market broke, and the true physical price asserted itself. We are watching the exact same macroeconomic pattern repeat itself today, but on a vastly larger global scale. This time it is not just France demanding their gold back. It is the entire BRICS coalition. China, Russia, India, and their geopolitical allies are actively dumping United States Treasury bonds and replacing them with physical gold. They are preparing for the collapse of the dollar standard. The $282 premium in Shanghai is the definitive signal that the BRICS nations no longer trust the COMEX pricing mechanism. They know that Wall Street banks sell hundreds of paper claims for every single ounce of physical gold sitting in their registered vaults. By establishing a massive premium on their domestic exchange, the Chinese government is incentivizing the absolute drainage of Western physical reserves. They are paying a higher price today because they know that when the paper illusion shatters, the true price will be exponentially higher. You have to ask yourself why the mainstream financial media is completely ignoring this historic market fracture. If any other asset class experienced a persistent massive price divergence between two major global exchanges, it would be headline news on every financial network on Earth. They are hiding this from you because exposing the gold split would trigger a massive retail bank run on physical precious metals. If the average investor realized that the paper price on their screen was a manipulated fiction, they would immediately demand physical delivery of their wealth. The bullion banks cannot survive a retail awakening. Their entire business model depends on you leaving your wealth in unallocated accounts and exchange-traded funds. If you hold a paper gold product, you're nothing more than an unsecured creditor in a highly leveraged fractional scheme. When the COMEX finally runs out of deliverable physical metal, they will not gracefully admit defeat. They will invoke force majeure. They will halt physical deliveries and forcefully cash settle your paper contracts using the artificially suppressed spot price listed on the exchange. You will receive a deposit of rapidly depreciating fiat currency in your bank account, while the true physical price of gold and silver moons in the Eastern markets. You will be entirely locked out of the safe haven right at the exact moment you need it most to survive the inflation crisis. This is not just about gold. The exact same dynamic is playing out in the silver market with even more explosive potential. Silver is an irreplaceable industrial commodity required for solar panels, electric vehicles, and advanced military defense systems. It is the ultimate bottleneck. China is already the largest importer and consumer of industrial silver on the planet. As they drain the global physical gold supply, they are aggressively applying the same strategy to silver. The registered inventories on the COMEX have been plummeting for over 36 consecutive months. We are currently facing the 5th consecutive year of a massive global silver supply deficit. The world is consuming hundreds of millions of ounces, more than the mining industry can pull out of the ground. This structural deficit is entirely incompatible with the current manipulated price. When the gold split triggers the final collapse of the paper pricing mechanism, silver will be the most violent beneficiary. The gold to silver ratio is currently stretched to absurd historical extremes. When the monetary reset occurs, silver will drastically outperform gold on a percentage basis. The smart money knows this. The sovereign wealth funds are positioning themselves quietly. They are accumulating physical metal and storing it entirely outside the traditional Western banking system. They are not waiting for the Federal Reserve to announce the devaluation of the currency. They can see the mathematical impossibility of the American debt spiral. The United States government is currently paying over $1 trillion a year just in interest expense on the national debt. This trajectory guarantees that the central bank will be forced to print trillions more. As the monetary base expands infinitely, the purchasing power of the dollar will collapse. The $282 premium in Shanghai is essentially a forward-looking indicator of this impending currency crisis. The East is pricing in the destruction of Western fiat currency. You have a very brief window of opportunity to align your personal portfolio with this macroeconomic reality. Every day you wait is another day that tons of physical metal are permanently removed from the open market by sovereign actors who are playing a geopolitical game of survival. You must stop thinking like a retail consumer and start acting like a central bank. Liquidate your exposure to unbacked paper derivatives. Withdraw your wealth from unallocated bank accounts where you have no legal title to the underlying asset. Escape the fractional reserve illusion today. Take that capital and acquire tangible hold in your hand physical gold and silver. Buy reputable sovereign minted coins or standardized bullion bars. If you are moving substantial amounts of capital, utilize fully allocated and segregated private vaulting facilities located in safe jurisdictions. Ensure that your metal is stored outside the commercial banking infrastructure and that you hold the direct legal title to specific serial numbered bars. If you do not have exclusive access and clear legal title, you do not actually own the metal. You own a counterparty liability. Do not let the manufactured volatility of the paper markets shake you out of your physical position. The bullion banks will continue to execute massive orchestrated short attacks during periods of low liquidity to trigger stop losses and create the psychological illusion of a market crash. They want you to capitulate out of fear so they can acquire your physical metal at a discount to cover their own massive short positions. When you see the paper price drop, aggressively recognize it for what it is. It is a desperate defensive maneuver by a trapped and dying financial cartel. Use those engineered price drops as a strategic opportunity to aggressively accumulate more physical ounces. The fundamentals of supply and demand have never been more explicitly bullish in the entire history of precious metals. The structural shortages are absolute and entirely undeniable. The gold split is the definitive proof that the pricing paradigm is shifting from west to east. The Shanghai Gold Exchange is asserting its dominance by forcing the market to acknowledge the true value of physical possession. The era of unbacked paper supremacy is rapidly coming to an end. Those who understand this transition and position themselves accordingly will preserve their purchasing power and secure generational wealth. Those who stubbornly cling to the dying fiat system and trust the paper illusions of Wall Street will be completely financially decimated by inflation. The geopolitical chessboard has been set, the BRICS nations have made their move, the physical vaults are being relentlessly emptied, the massive premium in China is the alarm bell ringing in the night. You cannot say that you were not warned. The data is available for anyone willing to look. Take control of your financial destiny immediately. Ignore the soothing rhetoric of central bankers and political leaders who have a vested interest in keeping you fully invested in their failing system. Follow the undeniable flow of institutional capital and sovereign physical accumulation. The global monetary reset is not a future event. It is a current process unfolding right now in real time across the international commodity exchanges. The decoupling of paper and physical prices is the absolute undeniable symptom of a systemic loss of confidence in the United States dollar. Protect your family, protect your savings, and anchor your portfolio in the only asset class that has survived every single currency collapse in recorded human history. Physical gold and physical silver are the ultimate financial insurance policies against the arrogance of central planners. The mathematical reality is that there is simply not enough physical metal on the planet to satisfy the paper claims currently outstanding. When the music stops and the scramble for tangible assets begins, the physical premium will explode far beyond the $282 we see today. Do not become the exit liquidity for the bullion banks. Step out of the fractional reserve trap while the exit door is still open. Secure your physical position, hold the line against the paper volatility, and wait for the mathematical certainty of the market fracture to fully resolve itself. To fully comprehend the sheer scale of the deception, you must look at the mechanics of rehypothecation. Rehypothecation is the banking practice of pledging the exact same collateral for multiple different loans. Western bullion banks use this exact mechanism to inflate the paper silver market. When you deposit your capital into an unallocated silver account, the bank takes your money, but they do not buy a specific silver bar with your name on it. Instead, they use that capital to fund their own trading operations while giving you a digital receipt that says they owe you silver. If a dozen different investors all hold unallocated accounts, the bank might only hold one actual physical ounce in their vault to back all 12 of those digital receipts. They assume that all 12 investors will never walk into the bank on the exact same day and ask for their physical metal. This system allows the banks to artificially inflate the perceived supply of silver on the global market. By flooding the market with these unbacked digital receipts, they create the illusion of abundance, driving down the spot price and discouraging mining companies from expanding production. The problem is that industrial users cannot build physical products with digital receipts. A solar panel manufacturer requires actual silver atoms. A defense contractor requires actual silver conductivity. The industrial demand is rigid, absolute, and completely immune to paper market manipulation. This is why the actions of the Shanghai Gold Exchange are so incredibly disruptive. By demanding physical delivery, the Chinese buyers are forcing the Western banks to honor their paper promises. They are effectively executing a bank run on the entire global fractional reserve bullion system. As the physical metal is loaded onto cargo planes and flown to Asia, the remaining physical inventory in London and New York shrinks. But the number of paper claims outstanding remains exactly the same. This means the leverage ratio grows increasingly extreme and mathematically unstable every day. The banks are desperately trying to source physical metal to meet the Eastern demand without triggering a massive price spike that would bankrupt their short positions. They are scrambling to buy scrap silver, recycling old electronics, and sourcing metal from secondary obscure global markets. But the math is entirely unforgiving. The global supply deficit is too large. The mining output is too constrained. The industrial demand is accelerating too fast. The bullion banks are trapped in a corner of their own making, and the Chinese government knows exactly how to apply the pressure. This geopolitical maneuvering is designed to cripple the Western financial system at its most vulnerable point. By breaking the paper pricing mechanism, China is ensuring that the United States dollar loses its status as the unchallenged benchmark for global commodity trade and settlement. When global commodities are priced in tangible reality instead of manipulated fiat currency, the inherent weakness of the American debt structure becomes obvious to the entire world. The dollar depends on the illusion of stability. The gold split shatters that illusion permanently and publicly. This transition will not be smooth or peaceful. The collapse of the paper bullion market will trigger a cascading series of defaults across the financial sector. Institutions that wrote naked short contracts will face unlimited liability. Clearinghouses will struggle to maintain their solvency. The government will inevitably attempt to intervene. They will change the trading rules retroactively. They will impose new taxes on precious metals. They will try to restrict the movement of capital. But they cannot change the fundamental laws of physics or the reality of empty physical vaults. The only protection against this unprecedented systemic risk is absolute uncompromising ownership of tangible assets. You must operate outside the digital perimeter of the banking system. Physical silver in your own personal possession is completely immune to the collapse of clearinghouses. It is immune to the freezing of digital accounts. It is immune to the arbitrary cancellation of paper contracts. It is a sovereign asset that requires no counterparty to maintain its value. It has survived empires, and it will survive the collapse of the modern fractional reserve banking cartel. You must view the current suppressed price not as a reflection of silver's true value, but as a temporary gift. It is a subsidy provided by trapped institutions desperately trying to maintain the status quo. Take advantage of their manipulation to build your own impenetrable financial fortress. The historical window to acquire generational wealth at these artificially suppressed levels is closing rapidly. The premium in Shanghai is the definitive signal that the endgame has arrived. The sovereign whales are making their final moves on the geopolitical chessboard right now. Do not let complacency or the soothing lies of the financial media rob you of your financial independence. The signs of systemic fracture are everywhere for those willing to look objectively at the data. The massive unpayable sovereign debt, the relentless inflation, and the draining vaults. Position yourself immediately. Liquidate your paper illusions. Acquire tangible physical assets. Store them securely. Educate your family on the true nature of fiat currency and fractional reserve banking. Prepare yourself psychologically for the extreme volatility that is coming to the markets. The wealth transfer from those who hold paper to those who hold physical metal will be absolute and irreversible. Be the person who saw the gold split for what it truly was. Be the person who understood the warning signs. Be the person who secured their future before the trapdoor finally opened. The timeline is accelerating. The physical drain is intensifying. Notice the premium is expanding. The math is undeniable. The fractional reserve system is breaking under the weight of Eastern physical demand. Act now and secure your position before the retail masses realize the vaults are empty. We are standing on the precipice of a new monetary era. The transition will be chaotic, but it will reward those who anchored their wealth in reality. Reject the paper fiction. Embrace the physical truth. The ultimate financial reckoning is here. Protect yourself and your legacy today.